Okay, we are live. Welcome everyone. My name is David Kosmider. I am the creator of Timing Research. This is our show for October 6th, 2014. Today we will be discussing the 54th weekly report. If you haven't had a chance to look at it yet, you can go to TimingResearch.com/reports to download it now. If you are new to Timing Research, we are building a crowdsourced sentiment indicator. Every week I send out a quick 5-question survey to all subscribers, and then on Sunday afternoon I take that data and put out the report for the week. And so today I have 2 guests with me to discuss last night's report. I have Sean Mckisson from 360wallstreet.com and Corey Rosenbloom of AfraidToTrade.com. So, Sean, let's start with you. If you could just tell us a little bit about yourself.
Well, I've been trading for 20 years, 10 years full-time. In that time, I actually was licensed for a little bit with futures, mutual funds. Never got to Series 7 for stocks, but did all of that. I didn't really like being a broker. Didn't really like selling mutual funds. It was super boring. So just kind of got into trading, and then the last 10 years just doing it full time. I day trade futures and I swing trade stocks and options. I only do options on stocks, and I don't day trade stocks. So I day trade futures, swing trade stocks using the stock or the option. I don't trade Forex, and I don't trade anything really other than stocks and futures. But yeah, and then we just started back up. We're doing a live room showing the day trading stuff, and starting back up a couple newsletters for stocks and options and all of that.
Okay, great, thank you. And Corey, if you could tell us a little bit about yourself.
Sure. I got involved in the market in about 1998-9 with the bull market. Was a fundamental analyst in terms of the Warren Buffett and the bigger picture fundamental analysis. If a stock goes down, buy more, and those sort of things. And the bear market of 2001 and 2, after the crash, that got me more involved in technical analysis, which is there has to be a way to figure out how to avoid these bear markets and profit from these moves potentially. And that's what turned me into a hybrid technician, which is a chart follower with indicators and strategies, and a hybrid fundamental analyst. Sector rotation was what I got into next. And then just like Sean was saying, as the career progressed, I went down the time frames. And as I really enjoyed technical analysis, and that worked for me in terms of seminars and books and just different research that I did and applying that to trades, became pretty much a technical purist at that point. 2007, went full time. And once again, when the market fell, that was a turning point for me. I really just focused on intraday charts and went from that point on. At this point, I still do intraday futures on the S&P 500, but I still keep that. I really can't shake the whole bigger picture and how sector rotation and intramarket analysis and these larger concepts play into our strategies on the lower frames. And so I do use ETF trading, not so much individual stocks. I analyze those, but I don't so much trade stocks anymore. It's more so the ETFs for swings and intraday S&P or Dow futures for the positions. And I publish the articles and research and strategies and what I'm looking at and studying through a membership site and through the free blog on AfraidToTrade.com.
Okay, thank you. And I have activated the Q&A app for this Hangout, so if anyone has any questions for myself or Corey or Sean during the show, just type in your questions and we'll get to those at the end. So let's get started with the report now. I'm going to share my screen so everyone can see that. Okay, and as I said, this is the 54th weekly report, and you can download it at TimingResearch.com/reports. So, so last week, the sentiment was actually bearish, and the the confidence rating was higher on the bearish side, and that ended up playing out correctly with the S&P 500 dropping almost 0.5%. So for this week, the forecast for the coming week's move from the opening of trading today until the close of trading on Friday, of the respondents, 58.1% guessed higher, and 41.9% said lower. Sean, let's start with you. What is your prediction for this week for trading?
So I did, and on the blog right now, there is videos that every night we predict or give our anticipation of the next day. And then I also did a video that anyone can watch that's called the Dow, the bigger view. That's right there on the blog. That's going to maybe make my answer a little bit more clear if you want to go watch that after this. But we're looking for today a move down into a higher low. So if anyone has their charts up right now, you can look at a 60-minute chart. Let's say you're looking at the S&P. We look mainly at the NASDAQ and Russell and the Dow. But on a 60-minute, just go from Friday's low, or actually last week's low to Friday's high. We're looking for a pullback into there. Last week, the low was right on a daily support. So overall, I'm thinking up. But today I'm thinking down into a higher low on a 60-minute. Once the 60-minute gets into support, 60-minute turns back up into that bigger direction, which is still bullish. So overall, the pattern still says higher.
Okay, great. So your prediction is higher for the week. And Corey, what are your thoughts for the week?
Sure. Well, stepping outside of the fundamental of the news, we're going to have the Fed minutes on Wednesday. So Wednesday could be a turning point for the market in that sense. But going forward, I'm looking at this pivot point at about the 1975 S&P level. That's your 2050 EMA cross, and it's right now today's high. That was your opening gap, and we're pulling down from that. I tend to agree with Sean that the move should be higher. And one thing I'm basing that on is this repeat pattern that I've been discussing to members, and I just did a post this morning on the open blog, which is in, I think it was February, April, and about June, July of 2014, we've had these similar pullbacks where the market has a steep movement down. It's a retracement in this uptrend. Each time it's hit a trend line, just drawing that out by hand, but it's also hit this rising 20-week exponential average. That's about 1950 right now. And that's what I'm looking at for this inflection up. And the pattern has been really interesting in terms of the daily chart of the S&P, where you've had this kind of ABC retracement pullback, which we just saw, and this almost intervention, this strong bullish money flow into the market that has taken the price back into these 2050 EMAs, the most recent example being middle of August, where we had this little pullback and then a power multiple-day rally above. And that's my probability prediction. Same with Sean. It's logical to expect a little bit of a down movement, but if, I do a lot of things by if-then statements, if the market, if the buyers can push the market up through 1975, 1980, that probably triggers a repeat pattern for the fourth time in 2014, which is essentially those who are short would cover, would buy, and could propel this market multiple days in a row up to continue the uptrend, to repeat the pattern, despite these headwinds and news in October and those really. So if probabilistically, if we break 1974, 75, 1980, I'm expecting a move straight up to the highs. If not, again, pulling back in this range, being cautious, but we're just looking for this pattern to repeat. If it doesn't, that would be a sign that something has gone wrong.
Okay, so your prediction is also that it will most likely go higher as well?
Correct. Well, it's if we can break this level, I would say almost certainly. I'm looking at Wednesday to be the key pivot for the week, but I would say yes. If I'm believing the pattern will hold and thus push the market higher in that sense. That's a probabilistic, what I would say, dominant thesis.
Okay, great.
If I can jump in and say something, David, really quick, I just want to say something
Sure.
before I said. We always look at it because we're 100% technical traders too. We do the opposite of the news and the fundamentals at key levels. But the key thing Corey said is we always look for the market to repeat until it doesn't. And instead of trying to pick the one time that the pattern fails, we always want to go with it, anticipate it to complete until it doesn't. Once it doesn't, then we use that information to look for the opposite direction. But that's really hard for traders to do most of the time, is continue with a trend of a bigger direction. So I agree with Corey on that.
Okay. Okay. So both of you said higher, so you agree with the overall sentiment from the survey for this week?
Yes.
So question 3 of the survey is gauges confidence. After people select higher or lower, they select rate their confidence in their guess or forecast, 0 to 10. So the average for all guesses this week was 6.403, and the average for higher guesses was 6.222, and the average for lower guesses was 6.654. So we have much higher sentiment on the higher side, but the confidence for the lower guesses was quite a bit higher for this week. So start with Sean again. What would you rate your confidence at in your prediction for the week?
I would have to rate it an 8 until proven wrong on the pattern. There's always going to be, 1 or 2 of the 10 that, anything can happen, but I have to be about an 8 until proven wrong at this point.
Okay, thank you. And Corey, what would you rate your confidence at?
I hate to say I agree, but I would agree. One of my goals is not to be biased, but is to have confidence in the method and the strategy and the pattern is just supply-demand differential. And that I would say I would be a 9 or 10 if the trigger is a break above 1980. That would be, goodness, 2000 and above. But I do want to see it break that level. We're underneath that now, so I'm tipping the scale up to the confidence 6, 7, 8. Say 7.5, but if we're above 1980, I would say 10 to the upside.
Yeah, good point, Corey. You're going to use the confirmation to make your confidence higher. That's a good point.
Okay. Thank you. All right. So the bottom of the report of page 1 always shows the full history of results, and page 2 of the reports shows the entire history numerically. So let's move on to page 3. Page 3 starts with the open response questions. Question 1 is always what developing events, technical or fundamental, will you be watching out for this next week that might have a positive or negative impact on the S&P 500 and other markets? So I'll start with Sean again. Do you have anything else you're watching for this week that you might think?
I'm watching for just my key levels with my anticipation, which is day by day, and then that's inside of a bigger anticipation. All of the fundamentals, I'm not worried about Russia or a war or ISIS or Ebola. I'm not worried about any of that. There's always going to be negative news, and the news just only reports the negative. So it seems like everything is negative. So it's easier for, everyone to think it makes more sense for it to go down. And people have been saying that for 3-4 years, and it just keeps short squeezing. The reason it keeps short squeezing is the news sucks everyone in short. I get emails, when the Dow is at 12.5. And I'm saying it could go to 17.5, and that is impossible, right? And people are giving me absolute statements. It's impossible. It could happen. The more people that lean on one direction because of fundamentals, the more I'm going to go the opposite direction. like before we started broadcasting, before we were talking, I use the fundamentals the opposite. I want the worst news flow to be happening in support, and that's where I want to get long. If the pattern holds, then it's going to a new high, and it's going to short squeeze. So I'm not too worried about anything really on that list. I'm just worried about sticking to my rules and sticking to my trading plan.
Yeah, that's definitely important discipline in trading. Corey, did you have any other things that you're watching for this week?
Sure, a lot of the bigger picture and the narrative and the fundamental things, I'm not super concerned about the job. That was very positive in terms of the unemployment rate ticking down to 5.9 and the increase of the 228,000 jobs. That's really good. My broader picture fundamental, and what I do for my analysis starting out, is develop a broader theme, call it a narrative. And that narrative, in simplest terms, soundbite terms, is that the economy is objectively recovering, and the Federal Reserve and other central banks, for that matter, are choosing a policy of stimulation, which is helping push prices higher. And so I am a little bit concerned in terms of the uptrend moving beyond the chart. So Sean said the levels, yes, I could talk about the chart levels, but discussing fundamentals, things that I'm looking at on a news basis, it's this push-pull between the economy's recovering, yet these central banks keep printing money. And I am a little bit concerned in the sense that things are getting better. How do they justify this stimulus? And with the end of QE3 coming up most likely in October, that's something that could be a very, very bearish headwind. Not this week, I don't think, but going forward. I will be watching the Fed minute statements extraordinarily closely on Wednesday when that comes out. Anything else from the ECB with respect to Draghi and the potential bond buying program starting there, quantitative easing in Europe. So that's, I would say I'm watching those factors with this push-pull, meaning if things get really bad, that encourages central bank stimulus. If things get really good, things being fundamental reports, earnings, those sort of GDP, et cetera, unemployment rate, the Feds would pull back, the central banks would pull back. So that's something I've got my eye on, and that changes my thesis. That changes my narrative, which is, once again, that the stock market keeps trading higher in the context of a recovering economy, which is, say, fire it's burning on a open fire, but it's being stimulated with essentially a lighter fluid or gasoline on a fire. So take away the gasoline, take away the stimulus in the future, and that's concerning to me from a fundamental standpoint, and that would alter my narrative. But we're going to watch trends, and these trends will be proven to be probabilistically proving to continue as opposed to reverse. But I'm watching more so central bank policies than anything else at this point.
Okay. Okay, great. Now let's move on to question 4 of the survey. Question 4 is different each week. This week's is massive pro-democracy protests have been going on since late September in Hong Kong. Do you think the protesters will succeed in gaining their desired electoral reform? So I actually went through and quantified all the responses for the open-ended question, and only 5% of people who responded thought that the protesters will succeed in gaining reform in the electoral process for Hong Kong. So let's see. Sean, do you have any thoughts about this?
I'm probably not the right person to ask. I don't follow it too much. I mean, they probably won't get their way, but let's say the end result of them getting their way or not later on, what's the effect of it? I don't know. It's kind of going back to fundamental stuff. If there's a report, it's all in how you read it. It's all in what model you're using. There's a lot of variables. So probably not the right person to ask, but I'd probably say no, they don't get what they want.
Okay. And Corey, what are your thoughts about
Similar
this?
with Sean, it's just the fact that I like one of the respondents to the survey mentioned Yes, of course. I hope so. I hope so. I don't think so. If this is to continue, if China does grant the way, that could lead to a spattering of multiple other protests throughout the country. So it's almost as if they can't go ahead and grant what they are desiring. And that would set precedent and could destabilize the system. So, stop this before it, goes larger. But which is a concern. We're always watching China for signs of slowing or signs of how their spending and how their economic policies are affecting markets. So, the growth story with that, but just focusing beyond just on the specific question of will this be successful? Unfortunately, no. I think if it were successful, it could snowball or do a domino effect that could destabilize. I don't know. This is something that would probably not succeed, even though that would be nice if that were the case.
Mm-hmm. Yeah, I agree. There's probably not going to be much change. I did see one of the interesting things I read earlier today about it was criticism of the British government for not saying much about the protests. The British gave up control, I think it was in '99 or '98, but they had signed a treaty that is supposed to guarantee the certain rights for Hong Kong through 2047. I think it's freedom of speech and freedom of assembly. So, but I thought that was interesting. The criticism that I read about the British government not saying much about this issue. So,
yeah. Well, it's a complicated factor. International politics, international finance, all this. I'm with Sean. I'm not an expert at this by any means, but these things, global policy, global trade, global government changes. This is something not to be taken lightly, and especially with China, they can do retaliation financially and those sort of things. So it's probably easier to take a neutral, approach than to try to really be proactive, where not much probably will get done and risk escalation.
Right. Okay. Well, that's about it for the report for this week. Did either of you have any other comments you'd like to share about the markets?
If it's hard to talk about everything right now, obviously we're just hanging out here, but if there is a free video on the blog, there's actually many free videos. So if someone is interested in seeing our long-term view and our day-to-day view, they can go to the blog, search for, well, David, I think you have the link, but on the blog, yesterday there was a post for the bigger view on the Dow. Everyone can get 2 free months to the newsletters, both of them. So if you want to stay in contact, that's a really good way. Get day-by-day technical analysis.
Oh, okay. Yeah, I'll include that link when I send out the archive, or if you're watching the archive of this, link will be below the video. And Corey, did you have any other thoughts?
Sure, same. I'll let the link be in the video to afraidtotrade.com or the blog at afraidtotrade.com and the trial of the program too. And I do the same thing. Very much appreciate the invitation. Very much appreciate the analysis. And I always, when given a chance to speak to traders, always stress the need to eliminate bias, the need to eliminate absolute statements that Sean was mentioning. The market must go up. The market must go down. That's that should not be a place in a trader's vocabulary. Focus on key levels. Focus on objective probabilities, and a lot of times the market moving away from or toward a level. So keep it in terms of what I do in the planning and we call it game planning every night in the membership reports. Is just create a dominant or logical thesis that, given the trend, given the pattern, this is what should happen. This is what should cause traders to act. But if this does not happen, which we call an alternate thesis, and Sean mentioned it earlier, a big statement we use in the trading community is if something should happen but does not, then it often leads to a larger move in the opposite direction. That's because traders are trapped. That's why sentiment indicators, that's why this newsletter is important to gauge trader sentiment, find where traders are positioning, and if something goes wrong in expectations, it can lead to a flood of capital either into, which is short covering the market, or out of, which is liquidation. So we try to be as unbiased as possible, focus on price, and not get caught up in these day-to-day news events and to become biased. So again, just sort of in sum, eliminate bias as much as possible, focus on probabilities, focus on levels, and as Sean mentioned too, take it day by day.
David, I have one question. On the sentiment, you know how people were more confident that it was going down, even though more people thought it was going up?
Mm-hmm.
And that might have been confusing how I just said that, but have you noticed on average in all the reports you've done, when the bias is down, is the confidence higher that it's going down on average? Meaning the people that think it's going down have higher confidence it's going down.
Yeah, well, it's different, and it's different each week. There are, like last week, for example, the sentiment was lower, and also the confidence rating on the lower side was more than the higher side. So that's one of, I mean, basically what I've been doing so far is just gathering all this data every week, and so now that I have over a year of data, one of the things I'm going to start doing soon, a feature I'm going to add soon to the reports, is basically a forecast of some kind that shows, you know, here are the conditions for this week. Under similar conditions in previous weeks, this is what happened. This is what actually happened.
Right,
so,
right. Okay, yeah, that's valuable information.
Yeah.
I've just noticed people that are bearish seem to be more, it's for sure happening. You know, it's like, well, the people that think it's going up, well, I don't know, I'm not so sure, but the people that are bearish are, nope, it's absolute. Corey, have you noticed that?
Yeah, I have a lot of friends that I communicate with, colleagues and members, but a lot of times when the market does fall, it's almost a running joke. It's fun, you know, as traders we don't want to be too serious, we want to have fun and enjoy this, but a lot of times I'll get text messages saying, oh, here it goes, here's the beginning of wave 3, here it goes, we're going to fall apart. And then you don't hear those comments from the bulls. You don't see people sending me messages kind of being silly and funny on Skype or something. Oh, look, we just broke resistance. Here we go, new highs. Woo. You don't hear it. Correct. I would wholly agree. As traders, we almost are taught to go against, you know, trends and go against things, as new traders at least. But as professional traders, no. It's focus on the trend, focus on this, eliminate bias, eliminate emotion, or at least reduce those sort of directional biases as much as possible. But correct. I'm not sure why, but it just generally, you can look all these things around the world, ISIS, China, you know, end of this, end of QE, unemployment rate, whatever. So there seem to be smoke screens, but correct. It seems to me that the bearish thesis is more powerful to create congregates, to create people that really believe in that thesis, as opposed to the bullish thesis. With the exception of quantitative easing, you know, pushing stock prices higher, and a recovering economy, there's not a whole lot you can wrap around to say this is why the market should go up. It's, you know, you fall back on, well, it's you know, stimulus, and it's not a whole compelling as in, well, China this and Iran that and Ebola this, and you know, it's just I do agree with that comment, but not entirely sure why necessarily.
Yeah.
Okay. Yeah. Okay. Well, thank you guys. I want to thank you guys for being here. Sean Mckisson from 360wallstreet.com and Corey Rosenbloom of AfraidToTrade.com. I appreciate you guys being here this week. And I want to also remind everyone to go to TimingResearch.com/current survey before Sunday to fill out this week's survey. And then the report will come out on Sunday afternoon. So thank you, everyone, for being here, and thank you to my guests.
All right, thanks, Dave. See you, Corey.
Thanks, appreciate it. Thanks, Sean. Take care.
Okay, bye.